Welcome back. Since we're talking previews, a bunch of mid-cap IT companies will also be reporting today. And let's go across and ask Reema what to expect. I know there are, I think, 3 companies on your radar, Reema, but I want to start with KPIT Tech because this has been this high-flying stock. The market can go nowhere, but KPIT has only been going higher and higher, right? So tell us, what to expect?
Well, KPIT Tech is up 27% this year, right? This is despite the weakness that we've seen in the last fortnight. The stock is just 5% away from its 52-week high, and numbers are anticipated to be strong. JP Morgan is expecting a 5.5% constant currency revenue growth. Remember, some IT companies have reported a decline in revenues in the current quarter. The reason for that is the company has won 2 very large deals. One was Honda and the other one was Renault in the software-defined vehicle space. So this will propel growth for the company at least in the first half of the year. So the key is their FY24 guidance. KPIT gives you a guidance, so the street is going to be watching that very closely. But I was seeing a Morgan Stanley note, and they're saying consensus is baking in a 27% revenue growth for KPIT Tech next year.
FY24.
Yeah, that's what the consensus
27% top line growth.
27%. That's the Morgan Stanley. They're saying based on the Refinitiv consensus expectations, it's a 27% growth. So we'll wait what the guidance looks like, but it could be a good quarter, and the outlook is likely to be strong given this, big, large deal wins that the company has won.
All right, so that is from KPIT Tech. We'll look forward to that. The other one is L&T Tech, which is also due to declare results. What is that expected to look like?
Well, an okayish set of numbers. Dollar revenue growth 2.4%, constant currency revenue growth of 1.8%. But growth is also coming on the back of a flat quarter. In Q3, the company had no growth. 0 constant currency revenue growth on the back of higher furloughs. So given Q3 was exceedingly weak, Q4 is likely to look a little bit better. In Q3, that's in the December quarter, the company had lowered their FY23 guidance to 15% versus their earlier guidance of 15.5% to 16.5%. For FY24, CLSA says the guidance at 8 to 10%, excluding the benefit from an acquisition called SWC, and they expect the company to reaffirm their FY25 guidance of $1.5 billion of revenues and EBIT margins improving to 18%. So that's L&T Technology Services. And let me just wrap it up by Tanla. Now, Tanla Platforms has been quite, a stock which has struggled a bit. In the last 1 year, the stock is down 57% because the revenue growth rates for the company have moderated quite significantly. It's a company which used to see a growth of 30%, but in the last 2 quarters, the revenue growth has been very, very muted. There you have the numbers. Minus 2% year on year in the December quarter and just +1 in the September quarter. HDFC is saying this could also be a soft quarter due to lower messaging volumes in both enterprise and the platform segment. Volume growth is likely to be impacted due to lower promotional messages and marketing campaigns. So KPIT Tech has been a flyer. Expect a strong numbers. Tanla Platforms has struggled. The stock is down 57% in the last 1 year, and that's a company which could have a softish quarter. And L&T Technology Services, the guidance is going to be very, very crucial, will be an indicator for the ER&D outlook. Well, it's a wrap on trading. On that note, thank you for watching. Stay tuned. Halftime Report is up next.